Global stocks are climbing. A technology-driven rally that began in Asia is now spreading into Europe and lifting US futures, and the question investors are asking is how long it lasts. Japan's Nikkei rose in early trading, setting a positive tone across the region. That momentum carried into Europe, where Germany's DAX edged higher, continuing what has been a cautious but steady upward drift. US futures also pointed to gains at the open, with Nasdaq contracts showing particular strength. The Nasdaq is worth watching closely here. It is heavily weighted toward large technology companies, and when those firms move, they tend to carry the entire index with them. That is simply a function of size. The biggest tech names represent a significant share of the index's total value, so their gains and losses matter more than those of smaller members. So, why is tech leading right now? A lot of it comes down to interest rate expectations. Investors this year have been growing more hopeful that central banks in major economies, including the US Federal Reserve, could begin cutting rates. Lower rates are particularly good for technology and other growth-oriented companies, and here is why. When interest rates fall, the cost of borrowing drops. That makes future earnings worth more in today's money, a concept called discounting. Think of it this way. $1 you expect to receive 5 years from now is worth less than $1 in your hand today, because money can earn returns over time. The higher the interest rate, the steeper that discount. So when rates fall, those future earnings look more valuable, and investors are willing to pay more for companies expected to grow quickly. Tech firms, which often build value over long time horizons, benefit more than most. That logic has been driving fresh interest in technology stocks, and the results are visible across global markets right now. Still, the mood can shift. Analysts are careful to note that this rally has not yet been tested by hard data. Upcoming inflation reports, jobs numbers, and central bank communications, especially from the Federal Reserve, will all be scrutinized for signs of whether the current optimism is justified. European investors are also watching the European Central Bank closely, alongside signals from Washington. The bottom line, the advance is broad, the sentiment is positive, and technology is doing the heavy lifting. But durability is the real question. And that answer will come from policymakers and economic data, not from the market itself. If you are tracking this rally, keep your attention on central bank communications in the weeks ahead. That is where the next meaningful signal is likely to come from. This briefing is brought to you by First Financial News, clear daily coverage of the economy and markets at firstfinancialnews.com.